Alright, I'll give y'all a quick lesson on what I do. Um, First of all, you got to go to Lucid Trading. Let me show you guys that. LucidTrading.com, and you're going to this right here, Lucid. And you're going to make an account here. I already got an account, so I'm going to log in. So give me okay. Okay, then you're going to go to make an account here. Basically, go to this Lucid Trading. Go here, make an account. With that, and make sure when you're going to go to like get started, you're going to pick Lucid Flex. Lucid Flex 50K, that's the cheapest. 25K, they don't give you enough room. Your max loss per day is $1,000. Don't get done for a new trader. That doesn't give you a lot of room. 50K is the most popular. 100K is good, but starting out, I want you to get the 50K. 78 bucks. No activation fee. They pay for that. Daily loss limit, there's none. You can use this full $2,000, and that is what that means. You can use that full $2,000 to try to meet your target, and it got an end of the day drawdown. That means you can Google what drawdown means. It basically means how much you can lose. Because normally most prop firms have real-time drawdown. So if you go, let's say you make $2,000, then you lose some, your daily loss limit is moved up. But you can look that up on YouTube, get to explain it more. I don't want to make this video too long. But you get this one, boom. Make sure you copy this code down here. The 20K sale, 40% off. Where you get it for 78 bucks. So that's cool. Let's go back to where we were. And then what that will give you, hold on, let me go back. Hold on, sorry. So you pick this account, boom. This one right here. Select platform. And you're going to want to use this one right here, Tradovate. And TradingView, Tradovate, TradingView. Okay, that's the platform you want to pick. What that would do would give you access to this. This is Tradovate right here. That way you can practice. And the way you practice is this. Let me just reset the replay. Hold on, I'm going to start from the beginning. We log out. Log out. And I'm going to log back in. Once you make that account, you have access to this. It'll give you this right here to log in. Put your information in. They're going to email it to you. You log in. And then you have two options. You have the Access Market Replay. This is where you practice. This is your actual account. You click on this when you're actually going to trade. You're going to trade for the day. So we're going to do this, Access Market Replay. So I've traded today, and I'm going to show you the trade that I took and how I got it. Now with them, so I got funded accounts. So I'm just doing 500 a day. That's all I do. But when you're in your eval, you don't have to do 500 a day. You can do, I say shoot for, the max is 1500 for Lucid. Because you can't go with 1500, but don't shoot for that. Just you can pass the eval in 2 days, but I suggest you don't do that unless you got a solid strategy, which I'm going to give you today. But practice this strategy, because you can pick in practice mode. You can pick, go back 3 months each day. So we're going to do today. We'll go here, we're gonna pick today's date, 19th, hit OK, and we're gonna do market open, which is 9:30. So you'll pick 9, and then, so pick 9, and then I pick 29:29. So that's like 9:30. So give you time to, so hit OK, we're gonna start. Now, it's gonna bring you to this. We wanna do NQ, so you go here, type in NQ, and we're doing NQH6, okay? Then we're gonna make this big. First you're gonna pause it. Let's pause it. Okay, just if you need to rewind this, pause it, see what I'm doing, because you don't know the system. I know the system, so I know where to go. So you pause it, and then we're going to make this screen, this one we're using. We're not using this over here. Make that big, boom. We're going to customize. First, let's clear the screen. This is the default. We're going to go to settings. We're going to delete this TMA, delete it. We're going to delete volume, delete that. And average directional index, we're going to delete that also. So now we got this clean slate. So what I want you to do, go to indicators, and we're going to add moving average. EMA, we're going to add 2 of these. The first one we're going to make green, we're going to make it thick 3. We're going to make it to 20. 20. Green, the third thickness, 20. Save. Then we're going to add another indicator, another EMA. This time we're going to make this one white. Let's make it red. We're going to make it red. And we're going to make the thickness to, we're going to keep it thin. We're going to make this a 9. A 9. And we're going to save. Boom. So now you got the green and the red. Okay, and I'll explain what these do later. Then we're going to go to indicators again. We're going to add the VWAP. Let's go back. We're going to go to volume based VWAP. Boom. Add that, make that gold, and we're going to make this one, we'll make it 4, thickness 4, boom, so you can see it. Hit save, boom. Hold on, wait a minute, is that the VWAP? What am I on? Oh, 1 hour, okay, so we're going to change the, we're going to go to custom time, the time now. We're going to go to 2 minutes, 2 minutes. My phone. I'm going to save. So this is what we have here. 2 minutes. You can use the rolling thing to make it wide and spread it, and you can use this to make it like that. What's 2 minutes? That's 2 minutes. 2 minutes. This is 30. Okay, I'm tripping. All right. See, sometimes it'd be tripping. Like, I hate when it does it. It'd be stretchy. Alright, we're gonna make it stretchy and make it big. Okay, so the VWAP. Oh, okay. So explain what these are. The VWAP is the regular price range. Like it's a balance of the price for the day, and it's the same on all time frames. Okay, that's the gold line. So what the price normally does is that when it gets here, it always rejects depending on the direction it's going. Okay, come here, it rejects. Boom. So if you're above this, you're looking for buys. You're below this, you're looking for sales. Just remember that. Above the VWAP, buys. Below the VWAP, sales. Okay. And these EMAs is what keeps you in the trade, because you'll know when to jump out or when. So as long as it's above both of these lines and it doesn't close below the line and stays down there, it just close. As long as it's above these 3 lines, you're looking for buys. So as long as it hasn't violated these lines, stay in the trade if you can, if you haven't met your target yet. Okay. Let's make sure I'm not forgetting anything. I'm trying to make this detailed as possible. Okay, so boom. Dang. This is killing me. Sorry about that. Okay. All right, so now we've got everything on our screen. So we're on practice mode. This is just basically replaying today, what I did today. We're going to use, I call it just the 2-minute orb strategy with fair value gaps. Fair value gaps is key. Do not take a trade unless you see a fair value gap. Okay? We're going to circle back to that. So, this candle right here, this is 928. So let's play. We're going to play it. And this is what I do. So we're playing it. So this is the exact day today. And it moves exactly, it's just a replay. But you see, you get the feel of everything. It's not like Trading View where you can, each candle. Okay, so this is 2 minutes. It's the 2 minute, first 2 minute candle. So we're waiting 2 minutes. Wait for this candle to complete. And I'm gonna pause it once it completes. So we're still waiting. It looks big because it's stretched out, and I hate that it's stretched out like that, but it's not that big. It's only 2 minutes. It's just look big. But it is a lot of money. You could have got your money out of here, but that's more advanced. I'm not going to go into that. I'm going to make a video about, I use a 5-second to. Okay, so let's pause it. All right. This is the first candle. So we're going to go over here. We're going to go to shapes and rectangle, and we're going to mark out this first candle. This is your zone. This is what you're working from. Okay, so this first candle, mark the zone. And what we're waiting for is a fair value gap, which we already have, and I'm going to explain it to you. And wait for it. If we see a fair value gap, we're going to wait for it to go into the fair value gap, and we want it to leave. Not take the whole fair value gap. Let me mark the fair value gap real quick. This is fair value gap right here. Boom, 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 boom. Let's go here. Go back to shapes again. Get a rectangle. And I'm going to mark the fair value gap. This is the fair value gap. Okay. Right there. This and here. And what a fair value gap is basically 3 candles. 1, 2, 3, and it left a space between this wick, the third candle's wick, and the first candle's wick. That space. And now what happens is this goes down into that. And if it goes down, you wait about a minute, since it's 2 minutes. Wait about 45 seconds to a minute. Let it go down into this and wait for it to take some of it. And if it takes the whole thing, that's not a good. I mean, you can jump in it, but that's not a good setup. If it only takes half or just leaves a little bit, then you're going to wait up here to go into the trade. So let's see what it does. This is what I did today. Okay, you see it's going down. It's going up. But I wait for it to come back down. And you could have took that trade too. I think I'd end up taking the trade because I was looking at my 5-second, but we're gonna see what it does. Okay, it's pulling back, and we are how many minutes? We're about a minute in. I wait for it to come back down here to retest this zone. We want it to close outside of the zone that we created, and then come back down and retest it. So it's 11:33, 34. We got a couple more seconds. You can see it's pulling back. It's coming back. Okay, it's pulling back, pulling back. All right, it's in. Now we're going to wait for it went back down, so we're gonna wait for it right here. That candle's not done yet. We'll wait for it right here. We're gonna buy. Use one contract. Don't do two because you'll blow your account fast. Now we should have been in the trade earlier. As soon as it touched down, we should have got in the trade. In all honesty, I think it's gonna come back down. Now you can jump in this. I would wait for it to pull back after the candle's done. Let it pull back, and if it doesn't pull back, get into it up here. So we're gonna. So we got a couple more seconds before this candle is done. But you see it hasn't touched this fair value gap yet. That's the main thing. Let's pull back. We're gonna let it go down. Okay, boom. It's gonna touch it. Tag us in here shortly. Okay, come on.
Order filled.
Okay, we're tagged in. So we're at 100. So it's going to come back down here and touch this fair value gap. Retest the fair value gap. The ideal is let it go down, touch it, and come back. See, it's touching it, it's retesting it, back out, boom. And we're just trying to get. I was just trying to get 500 because I'm on my funded account. But you're trying to get your 3,000, so we're gonna. 1,500 with Lucis 1,500. So we're gonna wait, and you can do a stop loss too. If you do a stop loss, put it right here. And what you're doing now, you see this, we're gonna go back. We'll make the red EMA a little bit thicker because I can't even see it. Okay, so now you see it. Now you see what it's doing. This red is keeping you in a trade. You see, it didn't go past it, so that's what keeps you in a trade. If it went past here and closed, you probably want to get out. But this is the strategy I've been using. I've been getting funded account after funded account. Okay, we have $500. I was out. I would have been out already. We're gonna wait and let it go. And what you're trying to do is just stay in it with this right here. As long as it don't pass that. Stay in the trade until you get your target. See, my target already was reached over here. You can see it right here. I had already hit it. Already hit 500. So we're just gonna wait. Now with trading, it never goes directly to the target. And you got to realize that it's going to chop around a little bit. But these EMAs keep you in the trade through the chop. And it keeps you in the trade, so you're like, oh, I'm about to lose it. No, you know what it's doing because you're seeing this. Like, oh, it's above that. Okay, cool. And I'm gonna make some more videos when adding other indicators, but this is the bread and butter right here. Now you can do your own research and add stuff in addition to this to help you that you think is missing. You got to make it work for you. Take a strategy and you make it work for you. If that makes sense. When I say work for you, like, like a job. You always find a way to cut the corners and all that stuff. As you can see, this is moving. The strategy is spot on. It basically just retested this fair value gap. And then you jump in. Normally you wait right here at the fair value gap and then get in, but this is 2 minutes. It's good. You don't gotta wait that long either to get your money, because 5 minutes is cool, but it take you forever to be sitting there forever, waiting for a fair value gap. 5 minute fair value gaps is, yeah, but you could have been in and got your money. But you see where we at now. We at 1,000. We at $2,000, and we're still above this. We're trying to get to 3,000. Now we started trading at 9:30. It's 9:44. Not even 15 minutes. Where we at? We almost hit our goal. Well, we actually passed our goal. Lucid is only 1,500 a day. That's all you can make. If you're doing some other prop firms, you can do it in one day. Like Apex, I get them all the time. You can do it in one day. So basically, we can just get out of this trade. It's going to go to 3,000 because I think it went all the way up. And that's pretty much it. But you basically will stay in this trade until you reach your target. This helps you stay in the trade till you get your target. Always have a target. And then once you get above like your entry point, like down here, you take your stop loss, move it up. Move it up to here. Or just move it up. Just move it above so you won't lose no money. So if it comes down and hit your stop loss, you done made your money for the day. This is a turtle race. Tell you that now. It's not a rabbit race. It's a turtle race. You stack your accounts. $500, $200. You can scale back after that. Like once you work your way up to 10 funded accounts, and then you just do the math. You just make, and then you copy trade all those. And once you do that, you trade on one account. There's a copy. You just know, okay, I made $500, but in the back of your head, once you're done, times that by 10. So that's 5, 10, 15, 20, 25, 30, 35, 40, 45, 50. That's $5,000 in a day. And you do it 5 days a week. 5, 10, 15, 20, 25, that's $25,000 a week. And then just do the other math. Just don't get too excited, but just take it a day at a time. But I just want you to know, and when you trail your account, when you trail your trade, make sure that you're under these lines when you bring your stop loss up. Okay, so because if you come down here, it's going to bounce off either this one or this one or this one. But this too low. This is low. Just pick the line that's if you want to, like I said, we already got our money right now. Just pick the line. Say it moved up, so let's move this up. See what I'm saying? Boom. I'm just waiting for it to let it do its thing. Let it do its thing. We're at 2,300. Let's stop it. I gotta get ready for work. Exit. Okay. Matter of fact, let's just stay in it. I just want to see. We hit 3,000. Pretty sure we did, but what time is it? 10, 14. Okay. I've been trading a long time, y'all. While we sitting here, I'm just running my mouth. I've been trading a long time. 3 years, going on 4 years. Probably 4 years. Self-taught myself. A lot of trial and error. But I'm being more consistent, and that comes from just learning. Now, I didn't have anybody like to mentor me or tell me, give me a strategy to perfect. So I was losing money, but I've got my money back. But I know this year I only got like 2 payouts, but that's gonna change. Next year's my year. Because my issue was to stay in the trade. That's what I was having issues with when I came across this EMA. It just made everything. I'll be having like $3,000, $4,000 days because I'm letting my trades run, and I'm taking my profit without. All I need is like 500, $500. Then I get that. I move my stop loss up, make sure I secure what I got, and I just let it run for the rest of the day. I just trail it up with these EMAs. See, I'm moving up some more. We always go with the red. I always go with the red. You can do what you want to do, but you really want to go with the green because sometimes it comes all the way back. Cause this is fair value gap right here, and it's going to retest that fair value gap right there. But we're gonna let's get out. I know it's going to do that, but you get the gist. Let's do that. Boom.
Order filled.
Okay. Now, this is all I'm going to explain for this video. That's the strategy. Perfect that. If you have any questions, let me know. And, yeah, perfect this. That's it. This should get you funded. If you do this, it should get you funded. Follow it to the T. Don't jump in early or anything. Just wait for, like I said, let's go over real quick. 2-minute candle. Draw the zone. Wait for it to come back and retest the first fair value gap. Sometimes you won't have a fair value gap, but 90%, probably 80% of the time, you have a fair value gap about the first candle. You just wait for it to come back, retest it, then you get in the trade. That's what you do, and then you just let it do its thing. And I will tell you I'm gonna make a video about market structure on how I see it. That'll help you see the direction and where it's going. But that's kind of like, it took me some minutes for me to click in my head, but yeah, that's pretty much it. So just do the strategy, and I go more in detail about market structure. Matter of fact, let me just do something else here. Let me pause it. I'm gonna pause this and show you what I do. I think I kind of skipped it, but I didn't want to have too much information. But before you start your day, go to the daily chart, and you're going to mark out previous day's high and previous day's low. So you take a line, horizontal line. This is each of these candles is a day. You mark out the day, previous day high, boom, and you can't even see it because the other stuff over there, and the previous day's low. Boom, mark it out, boom. So if you come into the market at 9:30 and you are already past the previous day's high or already below the previous day's low, 9 times out of 10 it's going to keep going down. So you would just look for sales. If it's above, like today, it is above, and you will look for buys. And those EMAs work exactly on the day chart like it does on the 2-minute chart. See the VWAP? It's above the VWAP already when you came in the market. It's above the red, and it's going above the green. So you will be looking for it to go to the top of here for the day. But that's like swing trading. But I'm pretty sure that's where it's going to go. It's going to go in that direction. I mean, I make it up here all today, but it's going in that direction. Because if you look at this, it's just like a chart, just like a 2-minute chart. No highs, lows, low, high, low, higher, low. It's going to go more like go past this and go up to here eventually, probably in the next couple days. But that's all I wanted to say. Let me drop back down to the 2-minute. Don't want to confuse you, which I probably already have. But yes, let's save that. Boom. All right. And here we are. It's above the. I hate. That's one thing I hate about TradeOvate. It pops back to this big ass shit. Anyway, that's the end of my video. Have any questions? Let me know.